Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I want to go over, I'm mainly going to talk energy here. I'm going to go over a whole bunch of different types of energy. I'm going to go over natural gas in Europe. I'm trying to wrap my head around basically an energy crisis that could potentially be coming. And I think it's going to start in Europe and Asia with natural gas. And then it's going to blow out to everything. This is just a guess, guys. I'm just giving my opinion here on I think it's going to have an impact on all commodities, but I don't know. I'm trying to figure out who's going to be making the money. Uh, you can have prices go up, but if energy is the driver of that price increase, uh, the mining companies, their margins are going to get squeezed, and we're seeing that with some of the companies with them shutting down because they can't make money, and it's going to have this effect where it blows out to everything. Because energy's involved with absolutely everything. You have to make products with electricity. You have to transport products. And I've talked about this once before that we're putting in these energy sources which are not stable, they're intermittent, and we have no way of storing the actual electricity. And I don't think that's necessarily a problem. The way you solve it is you don't put those things in. I mean, that's my easy, simple outlook view. Because when you put in a coal power plant, when you put in a natural gas power plant, you store your inventory in the feedstock to those highly reliable, highly efficient, stable output units. When you put something that's intermittent in the mix, uh, your energy source or your energy supply uh, is out of control at that point. And you get these huge fluctuations of power generation and no way of buffering it. And if there's no way to buffer it, and what they're doing is they're just running natural gas over time. And what you're seeing is you're seeing natural gas inventories decline around the world. When you decline natural gas inventories in one area, you're going to strain other areas. Because what's going to happen is the price goes up, and then they're going to look somewhere else, and someone who is a natural gas company is going to say, oh, I could sell my natural gas over here versus our local area, which then drives the price of that local area up. So a major shortage and a problem with implementing large amounts of solar and wind anywhere in the world is going to disrupt the entire world's energy systems, because what's going to happen is the price goes ridiculous in some areas, and then it's going to draw other resources from other areas of the world, creating a crisis in every single area of the world in terms of prices. And I think that's what we're seeing. I think we're at the beginning stages of this. And it all starts, and I'll show you some charts here, guys, because that's how I view the world, as charts. It all starts with natural gas prices. And we saw a blip of it in 2020. In 2020, we saw East Asia blow up to the upside for natural gas. And then you could see a blip in Britain and Europe. And what's happening is the more they implement non-stable solutions and no way of buffering that electricity, we're starting to see greater and greater movements in prices of natural gas. And I think we're also depleting natural gas around the world as well. So it's a combination of a couple things. But if you notice that these swings are getting larger and larger for a larger group of people. So yes, East Asia blew up, and we're probably going to blow up again in East Asia. But you're also seeing Britain and Europe joining the mix now. And then eventually what you're going to see is you're going to see United States, it's starting to join as well. And I think you're going to see US start to follow this basic, the large volatility in natural gas. Now, This is at Europe's storage levels, and you can see that 2021 is very low going into a winter season. And I think they're in the northern hemisphere. That'd be winter for them coming up. So they're coming into winter with some of the lowest inventory levels, and you can see the prices are rocketing higher. And I think it's going to drag the United States natural gas prices higher with it. These are the prices here. This is oil, and you can see oil's breaking its little short-term downtrend to the upside. Natural gas could be breaking to the upside here out of this upward channel that we could see moving on up. I thought it could potentially come back into the channel. Well, it looks like we're breaking back out of this channel. It's going to be interesting to see where this thing goes. And I know I've got gold in here. I just threw gold in because there's no way. I just don't believe that we could have an energy crisis and have gold not go up. It just doesn't make any sense to me. You're going to have inflation. Energy permeates absolutely everything in our economy. It's a feedstock for inputs of almost absolutely everything. So if oil and natural gas go through the roof, I would think that electricity prices would follow shortly thereafter. And then eventually it'll work its way into inflation. And I redrew the points. I grabbed this point here, and just drew it straight through from the top. And perhaps we're looking at gold through this lens. It's just back testing, and we're about to launch at any point. That very well could be the case if you draw it the way I have drawn it here for gold. And then looking at, switching back and forth gears. I know, guys, it's kind of, just work with me. Working gas and underground storage compared with 5-year maximum and minimum. We're starting to come below it, but not too bad. I think this is for America here. We can see coal. Coal is starting to rocket higher, moving on up, which when natural gas moves, and we're going to go to these ridiculous levels, it's going to put pressure on the United States natural gas, which then is going to put pressure on coal because coal is a substitute for natural gas. So wherever they can run coal, they're going to run coal. And you're seeing this permeate out to everything. You're seeing it absolutely everywhere. And you're seeing butadiene. Butadiene is also ready to break out to the upside at any point. We've got the CRB index to S&P 500. The CRB index it just broke to the upside and is about to launch higher, meaning that commodities are going to outperform stocks. And we're seeing heating oil. If you draw the trend line through here, it's breaking to the upside for heating oil. Propane already broke. If you drew it through this way here, you draw the line across, it broke to the upside and it's moving on higher for propane. Uranium, you draw, and the trend lines here, you draw a trend line up, it broke to the upside and could be moving higher with depleted inventories and running deficits. What this picture is painting, and what I'm trying to piece together here, is that an energy shortage is developing, and it started with East Asia in 2020. And now everything's starting to blow out and expand. So if we were to take the one chart here, we've got the blowout here. And you could see how it slightly impacted Britain and Europe. And now it's starting to impact them, and it's starting to impact the United States. It's rolling over into coal. It's going to roll over to oil. It's rolling over to propane. It's going to roll over to methane. And if you were to look at the energy prices of everything, they're all rocketing higher. Now, we've got inflation running into this mix as well. And we've got money printing. We've got an expansionary phase of real estate. This is going to be a weird setup for much, much higher energy prices. And I think it's going to be sustaining over probably a 4 or 5 year period. We've been dumping investments into renewables. Renewables, there's no buffer there. We've been choking the very thing that's been the buffer of renewables. So we put in solar, we put in wind, we scale that to some larger percent. Then we turn to natural gas and say, okay, natural gas, kick on when we want it. And we run natural gas OT, overtime. We've been swapping everything to natural gas. We've been trying to reduce coal because of emissions. And what's happening is it's stressing the natural gas system. At the same time, we're saying don't invest in natural gas and oil. Well, how is that going to work in the long term? Because you're choking the very thing that you're running overtime. And what's going to happen, I think, is you're going to see energy prices they're going to rocket higher for some period of time. Because of the investment being diverted to things that are intermittent and out of control in terms of their predictable outputs. Now, in order for those solar and wind to work, we have to implement something into the grid system to buffer everything. We haven't done that yet. We haven't put in those systems, and that's what should have been first. What you put in first is a little bit of solar, see if it works. Then you put in the buffering system. Then you ramp and scale your intermittent energy sources and have that buffer in place. We didn't put the buffer in place. We just ramped one and then used natural gas and oil and other things, coal, as our intermittency buffer. And then we choked all of that as from investment. So this is, one, it's ridiculous. It's absolutely ridiculous. Two, it's going to increase energy prices for absolutely everything. It's going to cause inflation, is my guess. And natural gas is going to bring absolutely everything far higher. So what I see in the future here is higher energy prices. And that's probably where I'm going to stick a lot of my investments, because the mining companies are going to be under pressure with higher energy prices, which is their input costs. And I think energy is probably the most direct way to play it, and kind of move away from the indirect stuff, which could have potential more risks, input cost risks and whatnot. And I think royalty companies will do very well, because I've thought a lot about this before on how to reduce input cost risks. So I've been heavily in royalty companies, physical precious metals, and then energy companies. That's kind of almost my entire portfolio. And I don't own a lot of mining companies because of risks that I think are coming in energy. But we're also seeing that commodity index start to outperform stocks, and that's very positive, because we could see big moves coming ahead of us for commodities. This picture does not spell a deflationary picture. This spells an inflationary outcome. If you guys like this content, subscribe to the channel. Give me a thumbs up. If you guys have any questions, put it in the comment section below. And thank you for listening. This is Finding Value.